to this. And Rian, please feel free to jump in here to speak to any of the current sponsors and deals that we have. We've discussed them before. Feldman Equities is actually not a new sponsor to Wealth Migrate. We offered our first deal with them in December 2020, but they are, I think, one of our most established sponsors as an operating company. They have been operating for over 100 years, so truly a family-owned legacy business. They have operated and succeeded through 7 recessions in those 100+ years of operating. As a firm, they have invested over $100 million into their own capital into their investments, and they have an aggregate 3 billion assets under management. Just, I think, kind of astounding the breadth of experience and depth of experience that this partner can offer to us. And they are specifically invested in commercial real estate development in the United States. And for the past 30 years have developed and acquired over 11 million square feet of office and retail properties. So just truly incredible to have them as a partner. What we have now actually closing today, but I do want to speak to it quickly, is Pinnacle Corporate Park, located in Fort Lauderdale, Florida. This is an office asset that is considered a value add Class A office building. This is what everyone saw me invest in earlier earlier in the hour on our marketplace. But just, I think, an incredible opportunity and one that we are very privileged to be a part of.
Gabby, if I can just one or two things in terms of that deal.
Sure.
I think the first thing here is that, as Gabby has said, it is A class. So the key point here is that there's not a lot of investor capital used to do renovations of a property. So the money that's spent goes direct into creating value for investors. They talk about changing, upgrading a lobby and things like that. It's minor. It's not that they need to be a full exterior renovation or whatever the case might be. A further critical point is that we're sitting with 92% occupancy, so very low vacancy rates. But also what is very key there is that the spread or the diversification of the industries that's represented as part of the tenant profile is very diverse. So it's not a case of if a industry suffers that we're going to run into high vacancy rates, for example. A further key point is it's very close to transport facilities, the interstate as well, and there's proper parking. And a further thing is that what we like here is, in terms of the threat of COVID, is that they've got technology in their building where they continuously freshen the air, which decreases the risk of COVID infections, which we believe take this big uncertainty of office and demand for office space. It lessens it, or it takes it off the table.
You know, it's interesting, Rian. I want to add one extra thing, which is a little bit of humor, actually. And in America, they call it curb appeal. And I go back to how this whole webinar has been, you know, from Rich Dad Poor Dad and my 20+ year journey. 20 years ago, if you'd said that I could invest in that building, just the way it looks from the outside, it's incredible. I love all the real important things that you've said, but actually just to be able to have that building in my portfolio makes me very excited as well.
Absolutely. And I think you touched on something important here, Rian, which is why invest in an office asset in today's times where we're all logging in from home and working remotely is quite common. But I think the performance of this property specifically through 2020, you know, it remained resilient. They've maintained 100% collection on rent from all of their tenants. If you look at to your point, Rian, as well, the diversity of their tenants, but their tenants tend to be law firms, legal and financial advisors, the like, where you will need to actually meet in person with those advisors or individuals in order to conduct business. We're seeing that this is generally a high performing asset and one that remained resilient through 2020.
Definitely. And if I can just say one other thing about COVID, because I think that's the biggest uncertainty for investors, is how it's going to impact demand for office space. So the key point here is that we believe that COVID can actually create an opportunity. So historically, people were put together into little cubicles or all bundled together, because we need to save office space and so on and so forth. Where with COVID, we believe that people will go back to offices. They will sit further apart. So suddenly, companies need more rentable space. So actually, what you earn per square foot or square meter of rentage go up because of this new dynamics of COVID. I think that is quite an important point. And the second thing is certain industries like advertising. You need people to work together. People must meet, people must discuss. And we believe that there will always be a demand or a need for office space, given those type of industries and businesses.
Rion, what's interesting, the CEO of JP Morgan's also come out and told everyone to be back in New York by September. So, I think the pendulum has kind of shifted. It was too far this way, it shifted too far this way, and it'll come back somewhere in the center.
Yeah.
Just pivoting now to a newer sponsor of ours, MAG Capital Partners. They specialize in sales leaseback and industrial real estate investment in the Midwest United States. Again, an established sponsor with over, I think it's 40 years combined experience amongst their management team, operating for over 10 years, and assets under management, I think, does exceed I don't know, Rion, I'm sorry, it's failing me, but it is a sponsor. They are a sponsor that is considered quite established by our category. And so what we have with them now still open for funding is Techniplas, an investment industrial space in Mansfield, Ohio. This is quite an exciting opportunity. It's our first industrial real estate opportunity on our marketplace, and one that we believe earns extremely strong returns. And what's wonderful about industrial and specifically sales leaseback is that the returns tend to be quite stable given the actual components of the arrangement between the operator and the tenant. Rian, I don't know if you want to speak to this maybe a bit more.
Yeah, I think what is quite important is that that we've got a triple N lease. What that means is that the tenant is responsible for insurance, rates, taxes, maintenance, and so on of the property. So in essence, what happens is that we've got the rental that's collected basically goes into the pocket of the investors. It's not that we get a gross yield with lots of deductions and the net yield is quite low. A further point is that Techniplas recently acquired Nanogate, and Nanogate is actually the operator or the tenant, and Techniplas is the guarantor for the lease. And this is the only operational property for Nanogate. So talk about skin in the game. If they cannot pay the lease or the rent, they don't have a property to operate from. So not only do we have proper guarantees in place in terms of a lease of 20 years, it's the only operational property for Nanogate. A further key point is Techniplas and Nanogate's got a global footprint. So we're talking about big corporates here. And a further thing that I just want to mention is there is what we call a preferred return. So what that means is that MAG Capital Partners, out of cash flow, our investors get that preferred return first. And it starts, if I remember correctly, and it goes up by 0.25% every year. And the targeted exit date is 5 years. So it's not a cash-on-cash return where we're hoping, if I can put it like that. There's much more certainty because it is a preferred return. And it is only one tenant, a 20-year lease with a guarantee in terms of that lease. So we believe we've got solid rental streams coming through. Also, a key point is there's quite a big discount by acquiring a property these days instead of replacing it. So in other words, we're buying at a lower price than the replacement cost, which means there's already embedded a potential for capital growth, capital appreciation.
Absolutely, absolutely. And for those not familiar with Techniplas, they are a leading global designer and manufacturer of precision plastic components and other related components or products in the automotive, industrial, electrical, and mechanical industries. They also have a almost 100-year history and production facilities and sales offices around the globe, generating more than $600 million US in revenue annually. So they are quite an established guarantor, and the property that they have acquired and the company that they've acquired here in this offering, Nanogate, they work with first-class references from Airbus, Audi, BMW, Ford, Porsche, Jaguar, to supply plastic products to that market, specifically in the United States. So quite an established rentee, if you will, or rentor rather, and guarantor and partner to MAG Capital Partners for this offering.
Gabby, and also if I can just add two things, you said that we're looking at a solid guarantor. First thing is that Daimler is their biggest client and it makes up 12% of revenue. So it's not that we're running a risk there that they lose a client and suddenly 60% of revenue is gone. So they've got a diversified client base. Absolutely. Nanogate itself got about equipment of about $48 million. So that that equipment value alone provides sufficient cover in terms of the rental liability. And also based on the revenue, the rental is about 2% of revenue. So the rental as a percentage of revenue is also very small, which gives us a lot of comfort in terms of that solidness of Nanogate and Techniplas as guarantor.
Definitely. And I just want to highlight here, because we've used a lot of jargon, what single tenant means. So that is a 100% occupancy upon purchase. In this case, MAG purchased this establishment with Nanogate as the tenant, Techniplas as the guarantor. These buildings are typically in what we would consider mission critical locations, such as headquarters or profit centers. In this case, in Mansfield, Ohio, it's in a core artery in the United States, in the Midwestern United States, for distribution of this manufactured product. And what a sales leaseback is essentially MAG, a real estate asset that is sold to MAG and simultaneously leased back to the seller, in this case, Techniplas. And what that does is it frees up the seller for dormant equity from corporate real estate to be redeployed into significantly more productive business uses. They can use it as a tax write-off. And the tenant, in this case, again, Techniplas or Nanogate, is both contractually responsible and directly motivated to maintain the property. Whereas MAG Capital Partners simply holds the deed for the property and receives that consistent rent annually for the length of the lease.
Gabby, then just maybe a risk that an investor could say there could be with a single tenant is you've got a single tenant 20-year leaseback or rental agreement. So the risk is if Nanogate goes under, we're selling with the property, kind of thing. The key point here is in that 20-year term, there's only 2 points to review or renew this lease. After year 10, after year 20. We're out at around about year 5, year 6. So it's before that mission critical first renewal come up, we're out of the deal already, which limits potentially that risk of a single tenant. So I just want to bring that under the intention of the participants as well. It's a low risk in terms of that single tenant and a 20-year lease.
Absolutely. And you can see that here highlighted under the investment risk category as well, where this deal is considered a core plus risk level investment opportunity. So if you have more questions about Techniplas or want to invest in it, it is open for funding now. It's going to be closing later this week. So there is still an opportunity, if you have not yet, to create your profile today, be verified and fund your wallet, and hopefully take part in this opportunity before it closes at the end of this week.